All right, we had a pretty intense week with of massive amount of selling. The last 6 or so days of significant selling. It ended the week slightly with a slightly green day, but overall it was quite a bit down. So let's look at things here. We have the 20 Delta weekly portfolio. For week 4, we ended up in a situation where it was actually a loss of $413 relative to the amount that we had generated in cash flow, which was $1,330 at the beginning of the week. We actually ended up not only not keeping that, we actually ended up negative 413. So that was a bit unfortunate. The 30 Delta weekly, this one we've been put a lot of shares. We've been put Hood shares back at 112 a couple of weeks ago. We were put Palantir shares at 172.50. We were put SoFi shares at 26 last week, and then this week we were put the IREN shares at 55. So we had a fair bit that was down, and actually the week was a loss of $3,280. Now most of that is a paper loss because we haven't actually sold these shares. The whole point of the wheel strategy is when you sell cash secured puts, and then the stock goes down, you are assigned, you put those shares, and now you own those shares for a period of time during which you're going to sell covered calls against those shares. So you're going to make some amount of money while you're waiting for those shares to rebound. And so we're in a period of time where we're looking at the rebounds, but I'm counting the paper losses here so that we understand what each week looked like. Because there is coming when these stocks rebound, there will be some weeks that are incredibly positive, incredibly profitable. But again, that's sort of paper profit because we will have held these stocks. And what I'm doing is each week I'm sort of marking the level that the stock left off, so that and starting each week at that level from the previous week, so that we can actually see what the gain was every week. And then when our shares are eventually called away, we'll be able to book the profit. It won't be a paper profit anymore; it'll be a real one. So that's the whole model with the wheel strategy. But you can see that right now, this last week was a loss of 32.80. And so if we go and look at our portfolio charts here, it all looks very red. And that's normal when the market corrects. There's a period of time where it'll be red, and then assuming of course that we've picked good stocks, which I believe we have, then we'll see things rebound. So you can actually see what this looks like. The 20 Delta monthly was down about 34.60. The 30 Delta monthly was down about 39.79. So you can kind of see this. It's all quite negative at this moment. Technically, the 20 Delta weekly is still profitable. It's still above its original cost base there. But anyway, most of them are negative, and we will expect them to be negative for the next little while as we go through this correction and the stocks have an opportunity to rebound. So that's where we left it, and we'll talk some more next week.